Thanks for tuning in to Corcelli's morning market update. S&P futures are, let's take a peek, up 3 handles. They were up bigger earlier this morning. Crude oil is down 0.8%. Natty gas is down 1.36%. Oil's down 0.2% after a nice weekly run. Dr. Copper is up 0.3% to 222. Coffee's down 1%. Let's take a check here on European equities, see how they're performing. They're up 0.4 in Switzerland, to flat in Germany, to down over 0.6% over here in Italy. Anyway, moving on to Asia. The Nikkei 225 up 0.4%. China last night, overnight, down almost 0.9%. Moving along to sovereign bonds. Sovereign bonds are a mixed bag this morning. We have Japanese yields higher, Greece higher. Looks like Switzerland was closed. Sweden higher. Actually, the Netherlands higher. Sweden lower. Portugal lower. Spain lower. Italy lower. So it looks like the pig's got a little bit of a bid, and the prices are higher, yields are lower. But the UK, France, and Germany, the higher. The US is much higher. And we have Mexico and Colombia, which are lower. Brazil, which is higher, but just hardly. Anyway, moving on to top news. On Friday, we had GDP out. The GDP came out and it was super weak. It was supposed to come out at 2.5%. Came out at 1.2 and an additional revision in the last quarter. Let's celebrate 1% GDP with higher equity prices. Yay! Big news coming out of China. Uber actually teams up with Didi. It's a $34 billion entity that started overnight. European banks dropped after the stress test. A lot of people are saying that Europe didn't do a real good job at stress testing their entities, and they failed to actually find out what's wrong because the truth would be too depressing. Tesla to acquire SolarCity for $2.6 billion, expanding their solar storage for electricity. $400 billion influx squeezes U.S. bond market. The U.S. is the tallest dwarf. I don't know if that's politically correct or not. Anyway, let's take a look at Bloomberg News article on Mr. Michael Corcelli. He's my favorite person, actually. He was quoted in an article by Mark Schenk on oil. Growing oil glut shows investors there's nowhere to go but down. And I was quoted saying the rise in supplies will add more downward pressure. It'll be a long time before we can drain the excess. Yeah, not only is the excess there, but the actual production and supply is strong. And even though people are trying to bury their heads in the sand and pretend like oil supplies are not there, they are. And we've become more efficient. It's at actually lower cost of extraction. So, and if you look at a lot of the earnings last week, and that's what Mark Schenk goes on to point out, he starts to talk about, ConocoPhillips and Chevron and Exxon reporting weaker earnings. And I was basically saying, hey, they're just like countries. They need to make up for the earnings. So how do they do it? They just extract a little additional oil. So please expect that the 100 rigs that were put online with Baker Hughes that we've seen come up over the last month or so, that's not a short-term trend. That's a response to higher oil prices. Anyway, I hope you have a great day. Bye.